Shamaila, let's bring in you into this conversation, because Colin's talking about the vaccine story and how important it is for South Africa. If I look more broadly at the emerging market story, what I'm getting back, and a lot of reports I'm reading, seems to suggest that basically the vaccine narrative is going to be incredibly positive for emerging markets. There does seem to be an awful lot of good news priced in around vaccines and many parts of the world. Are we overdoing it?
Happy New Year to both of you. I mean, I do want to mention that we've been constructive on emerging market assets for a number of months because of the vaccine story. And yes, spreads have come in, but we do think there's more room for spreads to rally further because the vaccine story is going to lead to a rebound in growth. You are going to have a low rate environment. Valuations in emerging markets are still pretty attractive relative to anything else you can buy, particularly in the high yield space. And the technicals are positive with inflows expected to pick up in emerging market, as well as supply likely to be lower on a net basis in EM. All of these factors we think is not really leading to overdoing it because there is more scope for outperformance for emerging market assets in 2021.
Shamaila, what does your dollar view have to be to support that view? I'm still trying to work out, what a blue Senate means for the dollar. I mean, you get more issuance, that could be dollar negative, but you get more growth, that's dollar positive. So I'm sure you have to take a view of that in order to inform where emerging markets still have the value.
Absolutely, and our view has been that the dollar is going to be structurally weaker in the medium term. The blue wave, we think, is actually going to emphasize that. So the factors that you mentioned, there are dueling factors, but the weaker dollar is likely to prevail. The fact that there will be, as a result of a blue wave, more stimulus, but possibly also infrastructure stimulus, is a real positive for emerging markets if it materializes.
Colin, what is your perspective on emerging markets? South Africa are obviously having a very tough time of things, but as you lift your kind of eyesight and look around the world, do you see a big opportunity here? A lot of people are starting to reposition reasonably aggressively into this space. A lot of people still see portfolios as being underweight. Excluding where you are right now, does that opportunity look real to you?
I think it does look real because global factors, which have been very negative for some time in 2020, look decidedly to be turning, with views on the United States, China, and the vaccine combining in a very positive way. So, from my banking background, I look at that and I think, that people are going to see a lot of opportunities for that positive global environment to feed local economies. I think the warnings are whether the vaccines actually go into these emerging market countries because, the emerging market countries tend not to have the manufacturing capacity. That's certainly the case in South Africa, and don't have the buying power or the leverage that the developed markets have. So our ability as an emerging market class to get the vaccine to the people in such a manner that these economies can actually reach the potential and trade through what is better global conditions, I think is a key factor. And then there are other factors where some of the emerging markets, I would say, for example, South Africa and Turkey, Brazil maybe, are less well positioned, and others are better positioned to take advantage. But it's better this way around than having a global environment that doesn't provide any breathing room or oxygen to the emerging markets. So I think there is upside.
All right, well, fair enough. So, Shamaila, I'm wondering, based on your view, if we put the vaccine aside for just a second, based on your view on global growth and infrastructure, does that mean that the emerging market countries you need to be playing are the metal exporters?
We think we are very positive on energy because we think that growth will recover and oil prices have rebounded somewhat, have more room to go, and high yield energy credits in EM are not fully reflecting that. So yes, commodity plays are important. Commodity prices outside of energy have actually been fairly close to 5-year highs. So it's they really haven't fallen as much as one would have expected in this environment. And commodity plays remain attractive in emerging markets. But I think it's just beyond that. even if you keep aside the vaccine plays, there are a number of credits in particularly the EM high yield sovereign space that are misunderstood. And actually, we believe that South Africa is one of them where medium-term fundamentals we do think are not being reflected in current prices, same as other countries like Argentina, El Salvador, that are beyond just commodity plays, but we think are not pricing in what we think is going to be a fairly benign global environment relative to their underlying fundamentals.
Shamaila, can I just get your take on a subject we're going to hit in a few minutes' time, and that is China relations between Washington and Beijing, basically. We've seen today Alipay, etc., being turned off effectively in the United States. I don't know how the new administration is going to treat relations with China, but they look as if they are going to remain relatively tense. To what extent should that cause concern for investors, particularly as they invest into Southeast Asia, particularly as they invest into China more particularly?
I think that's a really important point that you raised, and I think you are correct. The relationship between U.S. and China is likely to remain tense in the medium term. However, there's a very important nuance that is important to appreciate for emerging markets. That is, has been a lot of unpredictability around that relationship. There's been a lot of volatility. We do believe that the Biden administration is going to be much more predictable and multilateral in its response to China. And the headline risk around this relationship is likely to go down. And that has had a very important impact on emerging market sentiment over the last few years, weighing on flows into emerging markets. And that headwind, we think, is going to be removed under the new administration. I mean, even if you just look at the sanctions that have been imposed in the last few weeks, there's been a lot of confusion around that. And it wasn't the fact that there were sanctions, it's just that there has been a lack of clarity that creates a lot of volatility around emerging markets.